Hey guys, what's up? Alec back with the daily stock market, and look at that. In the last 3 months, we're up $7,100. In the last 6 months, we're up $17,000. So our portfolio is on track for the year. We had an absolute crazy week last week with Apple and Amazon both reporting earnings in the same week. We see Apple's up 6%, and lots of members in our private trading group made lots of money on calls for Apple. The account was up 64%, $700. Thank you, buddy, for the Apple call. Really needed this one for the account. Another one up $560. Great Friday. Account was up 15% total. And then we saw an absolute banger, 324% gain, $3,500 made on this Apple call. And the results just keep pouring in. So DM me if you want to join that close friends list. I actually just shut down signups, but I have a wait list going on right now. So DM me to be first on that wait list. However, in this video, what we're going to be talking about is another exciting earnings week ahead. Starting off Monday before the open, we have Spirit reporting, Spirit Airlines. And then after the close on Monday, it starts getting a little more exciting because we have Palantir reporting, Lucid Motors reporting, Realty Income, him and hers. And then Tuesday before the open, we have Walt Disney Company, Celsius, Datadog, Crocs, Nikola, Ferrari, BP. After the close on Tuesday, we have Rivian, Upstart, Wynn, Lyft, Twilio, Reddit. Reddit just IPO'd, so it'll be exciting to see their first official earnings report. Wednesday before the open, we have Uber, Shopify, Affirm, Toyota. So as you can see, basically every company that's in the S&P 500, if they didn't report last week, there's a good chance they're going to be reporting this week. Wednesday after the close, we have Robinhood, Airbnb, AMC, The Trade Desk, Beyond Meat, Duolingo, and AMD might be exciting because right now we're seeing an absolute tear on GameStop stock. It looks like the apes could be back, so I would definitely be careful with that one. We also have Beyond Meat reporting. Thursday before the open, we have Roblox, Warner Bros. Discovery, Plug, and then Canada Solar. Moving on to Thursday after the close, we have Unity Software, and that's about it, and it starts dying down after that. So nonetheless, we have a super exciting week. Make sure you take a screenshot of this entire calendar so that way you can save it and look through it, look back at it throughout the week. So the first stock that we're going to be talking about is Palantir Technologies, ticker symbol PLTR, up 3% on the week. And in the last 3 months, they've had a little bit of a tear, up 33% in the last 3 months. But here's where it really gets interesting, because in the last year, they're up 214%. So I know they're on a lot of different people's radars right now. That's why we're going to be talking about them in this video. If you remember, the last time they reported earnings, they shot up around 50%. So they are a very volatile stock, and a big move is to be expected. In the last 5 years, they're only up 135% because remember, they IPO'd at $10 per share, flew all the way up $35 per share, 200% gain, and then went on from there. That's the highest they ever saw the stock. It went on to fall 81% down to $6 per share. They made many of my videos best stocks to buy under $10 per share because they were under $10 per share for a super long time. So if you got in when you watched those videos, you're up over 100%. So congratulations on that. If we continue to scroll down, we can see some top questions and answers that are going to be answered on the earnings call. Are there any merger/acquisition discussions going on? What's your vision for the next 10 years? Will you emerge a global leader in AI? What AI products and services we can expect from Palantir in the next 5 years? When will Palantir be added to the S&P 500? So these are interesting questions to definitely think about. And remember, the reason why we saw Palantir stock absolutely soaring since mid 2023 is because of the AI boom. And this is an AI stock. At the end of the day, they have a lot of government contracts. They have a $52 billion market cap already, so that's nothing to sneeze at. They are a huge company with a PE ratio of 255. Just looking at the PE ratio, they are grossly overvalued, but when looking at an AI company, sometimes the PE ratio doesn't always tell the whole story. So let's dive in a little bit deeper. Here we can see on Robinhood, and the net buys have been pretty aggressive over the past 2 weeks. We can see people loading up on shares of Palantir before their earnings. The most recent quarter, we can see that there is more buying going on than selling when it comes to hedge funds. Same with Q3 2023 and Q2 2023. With the insiders, we can actually see in May, there's a lot more selling going on than buying. However, in April, we did see significantly more buying, and that was even above $20 per share we had insiders buying at. Some bullish things to think about if you're not really that familiar with Palantir stock. Palantir's focus on modular sales could lead to substantially more commercial clients, with products targeting both commercial and governmental clients. Palantir has a distribution top line with non-cyclical governmental revenue, insulating the overall top line during lean times. Palantir has strong secular tailwinds as the AI/ML market is expected to grow rapidly due to the exponential increase in data harvested by organizations. And remember, they have not only commercial contracts like this is saying, but also governmental contracts. So if business starts slowing down, at least they'll have those beefy governmental contracts to lean on. They've recently just got into profitability in the last 12 months, and they are sustaining that profitability, but they're really not raising that EPS by much. We've seen like 5 cents per share, 6 cents per share, 7 cents per share, and now we have expected 8 cents per share. So the EPS really isn't growing that much. However, what's interesting about this company, Palantir, is we can see that the revenue has been growing double digits consistently every single year. So we can see the last 5 years, for example, we've seen a 24% gain, 47% gain, 41% gain, 23%, 16%. These are all gains year over year. So the company is growing by a substantial amount. However, we could see that if we pull out to the net income, it has not been a profitable company, and that's why it was down 86%. I think we went over in the beginning of the video, from all-time highs to the low peak. However, recently, if we go to the quarters, we can see that it has been getting into profitability, and it's been growing its profitability by around 100% quarter over quarter, which is another reason why we can see the stock catapulting up 100, 200% gains. This is something to seriously look at, and why people are starting to take Palantir more seriously, because if they continue to grow their net income like this, they're going to be a force to reckon with. Also, one of my favorite things about Palantir is their balance sheet. They have so much cash and cash equivalents and assets in general on their balance sheet, with $4.52 billion in assets and only $960 million in liabilities, which gives them a debt to asset ratio of 20%, which is phenomenal considering most companies in the stock market have over 50% debt to asset ratios, and some of them even closer to 80%. Okay, we can see also over time their balance sheet has been developing a lot better. 2019, they were up to 90% debt to asset ratio. So it's exciting to see a company getting control of their balance sheet like this. But what about earnings specific to Palantir Technology? We could see that they're scheduled to report on Monday after the bell, with analysts expecting a 50% growth in EPS and a 17% increase in revenue for the quarter. Remember, they're also an AI company, so they're probably going to throw the word AI into their earnings call a few times, and also maybe release some exciting stuff behind AI, which could trigger the stock to go higher after their earnings report. However, there's no guarantees. If we continue to read, we can see over the past 12 months, shares of Denver-based software company have surged by almost 200%, with a 33% so far gain in 2024. Even so, the stock gets a hold rating from both Wall Street analysts and Seeking Alpha's also rating system. We can see that an analyst also said, who holds an extremely bullish stance on the stock Palantir, writes, as operating margins continue to improve and AI demand drives results, we think organic financial growth could send shares to $50 per share, assuming a stable sales multiple. Another analyst author, states with a strong moat in advanced data analysts, Palantir's valuation reflects its quality, suggesting a better long-term than short-term buy. We can see that the consensus estimate is 8 cents EPS, and the revenue should come in at $617 million. The stock has beaten revenue expectations 7 of the past 8 quarters and missed EPS estimates 4 out of the last 8 quarters. So 50% of the time in the last 8 EPS earnings announcement, it has missed. Something to definitely consider. Overall, there is a lot of risk with Palantir stock, both short-term and long-term. But if you want to see exactly what I'm buying before earnings, make sure you click on Success 2024. You can see all the success stories and the results that we've been having just in the last couple of weeks. This way, you can see exactly what I buy, what I sell, how much I'm buying, option trades, strike prices, expiration dates, and everything in between. So it takes the guesswork out of when to buy and when to sell and get in and out at the right time. Just message me at the Daily Stock Market on Instagram, 231,000 followers, 918 posts to get on the wait list. Now, the next stock that we're going to be talking about, Disney stock, reports earnings Tuesday before the open. So make a note of that. We can see they're down 4.5% in the last month with as low as $110 per share. In the last 3 months, however, they're up 17%, peaking as high as $122 per share. Year to date, they're also up 14% with lows of $80 per share. And if you bought them low and sold them high, you could be up as much as 50% in the span of a few months. So buying the dip on Disney was definitely a good idea, and they could probably further recover. Right now, we have a market cap of $200 billion on the company with a 69 PE ratio, so they could be a little bit overvalued in the terms of PE. However, they do have a huge moat, so that's something to consider. Just recently, we can see that the net buys for Robinhood were up 17% overall, but before that, this whole month of April, we saw a lot of selling of Disney stock going on. However, we have seen hedge funds really increase their buying in Q3 2023 with 36 million shares bought by hedge funds. And in Q4 2023, we saw 92% of hedge funds buying over selling. So it's something interesting to at least consider. Right now with insiders, just recently in April, we saw more insiders buying than selling, and that trend has been going on for all of 2024, and even in 2023 December, it was pretty even. But since the new year, it's been pretty one-sided with mainly insiders buying, except for in February, we saw 82% of insiders selling. Now here on Robinhood, it's actually saying that they're reporting in the pre-market, 5-7 pre-market. And then here on Seeking Alpha, we can see that the Disney company is scheduled to report its quarterly results on Tuesday after the market closes. So make sure you double check when Disney stock actually reports, whether it's before the open or after the close, because there seems to be a little bit of inconsistencies going on right now with the data and the information that's online. We continue to read the entertainment giant shares have gained 25% year to date and have earned a buy recommendation from Wall Street. Meanwhile, Seeking Alpha maintains more of a conservative hold stance. Investor group leader Howard J. Klein suggests the Q2 2024 earnings result may result in a small up or down movement in Disney shares, but investors should focus on the company's hard-edged decisions rather than cliches. On the other hand, Seeking Alpha author highlights that Disney's focus on aggressive cost-cutting and streaming profitability may indicate a plateau in Disney Plus subscribers and limited growth potential, which is an extremely bearish thing. We can see that EPS should be coming in at $1.11, while revenue should come in closer to $22.15 billion. We can see that Disney has beat EPS expectations 5 in the last 8 quarters, while revenue has only beaten estimates in only 3 out of the last 8 reports. So it's very concerning when it comes to Disney stock earnings report. Overall, we can see that analysts are very split on Disney stock, with an 82 lowest price point and a 145 highest price point. So on average, there's about a $128 price target on Disney in the next 12 months, which indicates around a 13% upside on Disney stock. We can see where some of these analysts are coming from. A lot of these 4 and 5 star analysts that just reiterated less than a month ago have around $140 or $130 price target on Disney stock. So for long term, Disney stock could be enticing, but short term, if you want to see exactly what's going to be happening this week and make some money in the short term, day trading, option trading, strike prices, expiration dates, message me, the daily stock market. Thank you everyone for making it to the very end of the video. All I ask is, if you learned anything in the video or thought it was valuable in any way, slap a thumbs up on this video, share this video with a friend, and comment below what stocks you want me to talk about later on this week that are reporting earnings. Thank you guys one last time. I'll see you guys in the next video. And remember, don't time the market, buy the market. Peace.